Welcome to PlotLines, where we'll use our over 30 years of experience in real estate communications to uncover the real stories behind real estate. I'm Heather Crowell.
And I'm Britni Acriveau. Dive in with us as we invite guests to break down the ever-changing landscapes of real estate together.
All right, welcome back to PlotLines. We're excited today to have Ron Bohlert, Director of Real Estate, supporting listed REITs for the New York Stock Exchange. So, Ron, thank you for joining us. And we'd love for you to tell us a little bit about your role and how you support listed companies and sort of your journey to being real estate specific.
So thank you, Britni, Heather. It's a pleasure to be here this morning. So my journey in the REIT space with the New York Stock Exchange goes back about 27 years now, believe it or not. So quite a while being in this building, the iconic New York Stock Exchange. Started off as a runner on the trading floor, bringing tickets back and forth from traders to their trading booths, learning the business, ultimately becoming a trading clerk, and then a specialist making markets and stocks on the trading floor.
Yep.
So in 2008, you guys might recall how the market cratered a little bit.
Yep.
Things were a little more difficult
Sure.
on the trading side of things. I made the decision to move over to the NYSE side, and happened to be that we needed a new person to manage our REIT relationships. Most of those stocks were trading at or near all-time lows. It was a really difficult time. So it was very fortunate to be able to get in, start learning the companies a little bit, interacting with them, and be a part of their journey over the last 15 years. We've seen this grow where we're now almost a $2 trillion marketplace. And to be able to build those relationships across all the different companies has been a really fun journey. Now, what it means, like on a day-to-day basis, people often ask, what does that mean to manage the REIT space?
Yeah.
And it takes on different things for different companies. The main piece of it is I am their primary point of contact at the New York Stock Exchange for the management teams for anything to do with their listing. And that could mean for some companies on a company-specific basis, it's trading information, providing them resources, special reports, special data and analytics for their companies to help them understand how and why they're trading certain ways. More often when they're trading different than their peers, because that's really when they wonder, like, why am I down a couple of percent when my peers are up, or why am I up or down? And being a former trader, there's a lot of ways to dive into the data and help them understand a lot better, the nuances of that.
Yeah. Yeah, I think I placed a few of those calls to you over the years.
And then, more on an industry-wide basis, we do things to try to help educate and bring the communities together. And, just this year we had our first mortgage REIT roundtable. We brought together members of the mortgage REIT community to sit down and share ideas and best practices and also discuss challenges that they're facing as an industry.
Yeah.
For 8 years now, and I know you've participated in our REIT IR symposium every June in conjunction with NAREIT's REIT Week conference.
Yeah.
And again, it's a way to bring together members of the REIT IR community for a day of professional development and learning, and most importantly, networking, because it is a tight-knit community and they often share the same challenges. So if we bring them together, it's a great way for them to talk to each other.
Yeah.
And then one last piece, this fall, we are doing our inaugural REIT board member forum. And we're partnering with Deloitte for a day of REIT board member education, which, given the changes in boards over the years, there's been a lot of evolution. We have a lot of newly seated board members who are maybe from different industries. We have folks that have been around for quite a while. But to bring those two groups together a little bit to talk about what can they do now to be the best board members they can, we thought was a great opportunity. So we're going to have our first one this fall, and hopefully that becomes a annual event also.
Yeah,
That's
great.
Well, thanks so much for that background, Ron. We're so excited to have you as a guest today and be able to get your perspective. So, as you know, our podcast is all about dissecting headlines in the real estate and REIT space. And of course, there's a lot of talk right now about the stock market and stock market drama, if you will, right? So we would love to get your thoughts on some of the conversation that's out there and is it still a good time to be a publicly traded REIT and why? And for the context for our guests, we're filming today on August 8th, just in case anything is timely before this airs. But we would love to get your thoughts on that.
Yeah, so being part of the New York Stock Exchange for a better part of 27, 28 years, I always think it's great to be a public company. But that being said, when a company's looking to go public, there's a host of things to consider, both on the pros and the cons side.
Sure.
In terms of the cons, understanding there are definitely increased costs that go along with being a public company, mainly on the regulatory and disclosure side. You really have to open up your books and tell the public everything about your company to be a public company.
Yeah.
You also have to grapple a little bit with, I guess, less control from the founding members and the insiders who help build the company as you're selling pieces of that to others. On the flip side, the pros, you do have much better access to capital. That's how you're going to grow your business, increase market share. You can use your public equity as a tool for attracting better employees, better management teams, and retaining them long term.
Yeah.
So that's a couple of different things to think about on that side of it. And also maybe not as important, but you do have the prestige and the public awareness of your company, being able to get it out in the headlines, have more people learn about it. And then, one of the trends we've been seeing, particularly in the REIT space and even some other sectors, the public companies that are coming out and exploring the idea are a little more seasoned maybe than they were in the past, meaning they've explored the private side for a while, they've grown, they have long-term investors, and they're able to come public through a variety of different avenues, whether it's without a listing, with no IPO, no capital raise, a direct listing as we call them. Some of them have a small capital raise, a small IPO. Some of them a little bit larger. Some have existing shareholders that sell some of their stocks. So there's a lot of different ways to think about companies going public. And then obviously the last couple of years with some SPAC combinations and things like that to help access the public market. So there are ways to do it. Right now, it might be a little difficult just because of the volatility we're seeing with uncertainty heading into the election, things, geopolitical concerns overseas. We most recently this week, we had the carry trade unwinding, which caused our 1,000+ point loss on Monday. So a lot of that could impede a company if they're looking to get out on the road, looking to go public. It's hard to price anything when you're looking at the big swings that we've seen over the last, couple of days even.
So given that, right, so real estate is capital intensive, and that's one of the reasons that a lot of real estate companies go public, so they can access those capital markets, which have been less available, I guess, over the past, couple of years, given interest rates and all of that volatility. Talk a little bit about the current trends in the equity markets. Are there any, sectors that are performing better or worse within the real estate sphere? Sure.
And it's helpful if we're looking at real estate specific also to look at the broader markets because they're all tied together these days.
Sure.
And, if you're just looking at the S&P year to date, it's no secret that there's been a handful of stocks driving a lot of the action, whether you call it the Mag 6, Mag 7, whatever it may be. And this is as of yesterday. You look at on a year-to-date basis, we've had the information technology world up 13% year-to-date. That's a pretty big chunk of the gains in the S&P, along with the communication services up about 16%. So those two, which encompass a lot of those Mag 6, were a lot of the broader market. If you take it back, if you just look at the last month, though, there's been a lot more talk about rate cuts and where the Fed is going, and the market is tending to price this in, maybe trying to be a self-fulfilling prophecy, who knows. But over the last month, we've seen real estate up 7.4%. And that puts them back to the plus side at about up 3% year to date. Separately, the utilities, again, another kind of dividend yield play, up 7%, which puts them up about 15% year to date. So we're starting to see that rotation of the communication services, some of the tech names selling off a little bit, money coming into some more of the yield plays, hoping for lower rates down the line. So it's been a net benefit. But, even so, we're seeing pressure across the board, stocks trading a little bit below where they probably should be in the REIT space.
Yeah, it's been a good short window.
And even more, specifically at the REITs, when you look at, sector performance, we do have the residential and apartment space, year to date outperforming on the margins a little bit. But across all the other sectors, you seem to have a kind of a split of outperformers and underperformers. So there are opportunities to trade within sectors to find some of the ones that
Okay.
are doing a little bit better versus, those that are maybe at a discount that maybe it's worth it
Yeah.
to try to get into a little bit.
Yeah, makes sense. You mentioned rates. Certainly that's been a hot button topic, and many of our guests have talked about it on recent episodes. Give us a little bit more on that. What are you hearing on the streets in anticipation of September?
So what I'm hearing and what I believe might be two different things. So, if you look at last December, they were looking at, maybe 6-7 cuts through the year.
Yeah.
I honestly didn't believe that was going to be the case, just because a lot of the fundamentals and the data didn't seem to support it.
Sure.
And then we went through, the 100% chance of a March cut, which went 0, obviously.
Yep.
And then throughout the year, we've seen that, just keep getting pushed out. And now we're looking at
Down the road. Yep.
one or two cuts in September. Again, you have to look at, is it data dependent and what are the reasons why we would do it? Is it because we have inflation in check? A lot of the tightening that we've done over the last couple of years is starting to take root and we're seeing benefits. Or is it because we are starting to feel the threats of a recession and we think that we're trying to do it to not have that happen? So two very different reasons for a rate cut, and it's kind of unclear which reason they're pushing it right now.
Yeah.
In terms of the market reaction, it feels as if they are already priced in 1 or 2 cuts. So if we do get that, I'm not sure how much of a net benefit that's going to be for the market because it's already expected. The bigger question mark is if they do something out of line, whether it's 3/4 of a point or nothing. And there have been a handful of people that even have talked about a hike, which I don't think is going to happen either.
Yeah.
That's when you're going to see the market reaction pretty hard one way or the other.
Yeah. And I guess talk to us a little bit about how REITs specifically benefit or are hurt by wild swings in interest rates, just for our viewers' sake.
And REITs particularly, and the market in general, like certainty. I mean, I think the market itself would do a lot better if we knew, if they came out and said, you know what, we're staying right where we are for the next 18 to 24 months, which they will never stay.
I was just going to say that would be too easy.
that would be way too easy. But if you look at it from a REIT management perspective, if you're trying to price a debt deal, if you're trying to issue equity, if you want to buy an asset, and you're looking at a half a basis point swing in the next couple of months, it's very difficult to do that because that adds or decreases the cost of the deal you're trying to do. If we do get the cut, I think it would be a net positive for the REIT space in general. However, a lot of that is already baked in, I think.
Okay. Talk to us a little bit about some of the emerging REIT asset classes. There's some, for years there have been like 4 major sectors, right? 4 or 5. But in the recent years, there's been a lot more emerging. Talk to us a little bit about that, and if you have any predictions for some new ones.
So over the years, we've seen that expand, obviously, where you now have, the data centers, you have the industrial, we've had the gaming sector even has expanded quite a bit, the timber. We have one that does parking, which is an interesting, different asset class. And every time you think there might not be another one out there that we could look at, somebody else finds a way to make it
post offices, right?
Post office, a readable asset.
There you go.
So again, the question is, where's the next one going to be? I've heard, there are potentials for some other asset classes that could come out.
Okay.
We're going to have to wait and see on that a little bit, I think. But either way, it's only good for the REIT space to see this diversity coming out and the changes and the, innovations, I think, in the REIT model to encompass these other asset classes.
Yeah. And Ron, you talked about it a bit in the beginning, but I want to circle back here. Can you just tell us a little bit more about how you and the New York Stock Exchange support listed companies?
Sure. So there's a lot of different ways that we help out our listed companies. And we like to look at ourselves as, I guess, a trusted resource and sometimes even an extension of your investor relations team. If you want to look at it that way, we help out with communications. And a couple of the ways we do that. We do have some in-house media opportunities where companies can leverage our folks inside to do curated content. And then we're able to take these pieces and push them out through our social media platforms that have millions of viewers. Companies can put that out on their company websites.
Yeah.
And we look at it as a way for a company to tell their story in their own words.
Right. Right.
If they're looking to go other avenues into the broadcast media, we also have access to numerous different venues right downstairs on our trading floor where we can help facilitate those introductions if they wanted to go, live on the mainstream audience also. But it's a couple of different avenues on that front. Internally, within this building, if I know you guys have been here in the past, but we have some amazing, actual physical assets and rooms that our companies use for board meetings, investor days, non-deal roadshows, company events, dinners, you name it. And it's complimentary use of our space for being a listed company. And it's a great way to bring your team together in Class A meeting space with white glove treatment from our team. And that's something we routinely do. This building is full almost year round with companies monitoring that.
That's great.
It's a beautiful building too.
Yeah.
And one other thing I might add in terms of the things that we do for them. When companies have to ask about their trading, they don't only have myself, who's been here, who's been a trader for a while. When you go downstairs, we still have an active trading floor with human beings down there that are trading stocks. They see the inflows and outflows. They see the participants every day. And quite a few of them are in contact with our listed companies also to help explain it from the point of sale, to give that extra little bit of color. And it's something that, you can't get that anywhere else in the world. And it's, again, just another piece of the broad value of companies being here.
Yeah. Yeah. No, that's great. And I've personally experienced some of those services in the past, so they are appreciated. Okay. So like we said, the purpose of our show is to rewrite headlines, or craft your ideal headline. So, if you could craft the ideal headline for, the REIT landscape, what would that be?
Let's see. So REITs soar on historical CRE demand.
All right. I like that.
Short and to the point. Yep.
That would make my life very easy.
Yeah, exactly. We wouldn't be calling you off the hook.
All right. Well, Ron, we so appreciate you joining us today and sharing these insights with us.
Thank you, Britni and Heather. It's my pleasure being here.
Yeah. It's been great having you.
This podcast is a production of Gregory FCA. If you enjoyed our discussion, please subscribe wherever you listen to podcasts.